What's good, people, traders, and dedicated gold chasers? Welcome back to another edition of Backtesting. We're on episode 3 of preparation for our 100k challenge, and just another backtesting session with your boy Marcy, bro. Yeah, yeah. Welcome back. It's Tuesday today. For any of you guys or all of you guys tuning in from South Africa, I hope you guys are staying warm. I hope you guys are taking care of yourselves where you can and just like being safe on the roads, bro. Because hey, it's been wild. Like the weather that we're experiencing this week, I don't think like I can remember a winter that has been like this. Last year it was cold and it was rainy, but there wasn't like this storm that we had this year around. Like people's houses are getting flooded, people's roofs are blowing off, like the roads are flooded, people's cars are going through the most. And so like just keep South Africa and Cape Town in your prayers. I know like a lot of livestock is being lost and a lot of things are obviously happening with this natural like I wouldn't say disaster, but like the storm that came. So yeah, I do hope everybody is safe and sound, and I hope that everybody is like good, and yeah, that you guys can continue on your journey to becoming like beta traders, taking advantage of the cold weather, staying inside, capitalizing on the time that's free, and yeah, without further ado, let's take a look at the charts for a bit before we jump into the back testing. I think I'll jump into the back testing at 22.8. I just wanted to run you guys through my trades for the day. So far for the week, I am at break even. I've taken 4 trades for the week. So if I filter out, if I filter out from Sunday, you can see 4 trades for the week with a 50% win and break even rate. Sorry guys, I've been drinking a lot of tea and coffee just to stay home because I can't drink hot chocolate and shit. But yeah, as you can see, we took a win early on in the week. But so Monday started the week off with a win. We then took a L. Those 2 trades, I don't think I'd change anything on those trades. This morning, I took an L on a double bottom trade or point of interest trade, and then that was followed by a break even. Yeah, pretty much 3 breakout trades, 1 win, 1 break even, and 1 loss. Yeah, and then the double bot, the bounce, basically the 15-minute bounce, is what I wanted to take you guys through because that's the notable loss that I have. And as you guys can see, now from a 1-minute perspective, it looks clean. Let me just take you guys to this 15-minute before I actually read that note. I want to take you guys to the 15-minute that I had before. So this is a 15-minute time frame. So as you guys can see, price is pretty much bullish, and price action broke above the last. So this was the last low high that created this lower low. We then had price action momentously push into the upside, forming a new high, higher low, higher high. Then we had a pullback, and we never broke above these areas, but we did form this wick, but we never really broke above. So this higher low formed that higher high up there, and so there was no real breakout trades in London, but the price action came into these double bottom areas. And I think the one thing that I could have learned from this trade is that potentially waiting for a 15-minute close back into like the double bottom area, back above like the bullish structure. Because if we go to today's market structure, so in London, these were the areas that I had marked out, right? If I had waited for price action to actually break and close back above this area and then anticipated that after this price action is going to continue, then it would have made a bit more sense, right? and it would have been easy to capitalize since we had the pullback creating the wick and then price action pushed to the upside. But what you can see is that I took it down here. So basically, I think after this bullish close, because this bullish is after this bullish close, let's just see. Oh no, it's after this bullish close. So this bullish close actually created a new lower low on the 1 minute, and then we broke structure on the 1 minute. And once we broke structure, I started anticipating that if we do push to the upside, we should then just continue and like go to break even. We then triggered me in and like 050 to 6050 triggered me in, and then we just fell to the downside. And if I just read the note for you, you can see what it says. It says, I anticipated that this was a liquidity grab, and once the 1 minute structure, once the 1 minute break of structure occurred, which is a break of structure to the upside, I entered. However, looking back, it could be that we need price action to break back inside the range or back above the double bottom area to then consider 15 like once the 15-minute breaks back into that area, I can then start to anticipate that the next 15-minute candle is going to continue to the upside. With that being said, let's take a look at the after. So as you can see, price action pushed to the upside and then it just came down, and after this we broke back in and then we just continued to the upside. So my bias was right. Entry is something to learn on, which is good. And then let's see. So this was my second trade. It was a breakout trade. So if I take you to the 15-minute time frame, take you to the 15-minute before, you guys can see that I had time today. Work from home, so I had a bit of time. Can clearly see we had the break above the 15-minute level. Now this 15-minute close without a wick, I can show you guys on the live markets. So if I mark this area right here, so this 15-minute that broke above, you can see it closed with no wick. And when I go to the 1 minute time frame, that's this like where the note is on the 1 minute time frame. That is the 15-minute close 1 minute, and this is like the perfect explanation, because I know most people can't see what I'm talking about when I'm just explaining it. But this is the perfect explanation when I say that the 15-minute, when it closes with no wick, what that means is that like the 1 minute more likely than not formed a high. And like if the next 15-minute just continues, then this would have then just pushed up and the 1 minute would have continued in the push phase, right? But what you can see is that the 15-minute closed with no wick. The next candle then pushed bearish, and at that point when the next candle pushed bearish and closed bearish, that's when I set my buy stop. And the only reason why I did that is because now the next 15-minute basically created its wick, and then it also started creating the pullback on the 1 minute. So now I know that we have created a level on the 1 minute where if we break above and we close above, we should be fine in theory to then push to the upside. And the only reason why I enforce this rule is just because, like, based on my information that I have and my data that I have from my strategy, when price action does this and I just take an entry and price action continues, the chances of it pulling back is high. The chances of it pulling back and taking me out is high. So that was the befores, and then there's the after. And you can see price action moved clean, very, very cleanly, had an impulsive push to the upside, and then just unfortunate that it took me out. Now I'm so glad for the break-even rule, because price action came down, hit my stop in this case, and then continued to the upside afterwards. But that's why we have trade management rules, and we follow it like it's the Bible, bro. So yeah. Yeah, man. So it was a good day in the markets today, minus 1%. We break even for the week. So yeah. Whether we trade in tomorrow or not, we don't know. What we can do is we can check the calendar to see if we will be able to trade both sessions. So I can already see that I can trade the London session because there's no pound news in London, and then there is no significant USD news between 11 and 3 This news is at 4, so we should be fine. And if we just do a quick analysis from higher time frame perspective, what do we see? We see price actions in the impulsive phase. Before I go into my backtesting, I just want to hit this quickly. You can see price actions in the impulsive phase. Whether we're going to pull back or not, we don't know. All we can do is just sort of just anticipate what could potentially happen. And in order for you to be able to do that, you should be able to go down time frames, right? From a monthly perspective, you can see that we still have clean candles all the way to 208 roughly. So there is still 200 pips that we could push up to. Like we could still push up to 208. And I'm not putting it past anything just because we have clean imbalance to the left hand side from a monthly perspective. Now, whether we're going to do it in this push or not, I don't know. What I do know is that from a weekly perspective, you can see that we formed a high, we formed a higher low, and then we continue to push to the upside. So from a weekly perspective, this would be your area of interest. I guess if you're going to mark your last bearish candle before the big push, it would be that candle then, right? But yeah, just from a structural point of view, if I was to mark out structure, you can see that this is my last higher low. And then we currently right now forming the higher high. When you get to the daily time frame, what you can clearly see now is that price action is starting to slow down. Multiple weeks to the upside, few days, like 3 days of just struggling to break above an area in the market. Now, if you just mark out an area where price action has been, now I'm not just marking out a level, it's the whole area where the wicks are. So I'm just putting that level there just as the whole area. But you can see that like it's been 3 days, even if you consider today, which would be the 4th day if we do close below these areas, it's 4 days of information where we're just struggling to break above an area in the market. Now there is a high chance that after last week, this big impulsive move, that we could go into a lower range from a higher time frame perspective. Doesn't mean you can't trade. And it's like you can see it from a 4H perspective, because what you can see here is price action had created a higher high, a higher low right there. So if we do that, and then price action broke structure to the upside right here with this impulsive push, pulling back. But now what you can see is that we are failing to break above these recent highs that were created, right? So we're failing to break above those recent highs, with the most recent 4H candle being bearish, which is very key, really key. So there is a chance that now going into the next 4H candle, that the way we're rejecting these areas right here, we could push to the downside, thus creating another day where price actions failing to break these areas, right? And that could be signs of weakness, potential signs of weakness. And the reason why I'm saying that is just because price action moves in phases, and you move from an impulsive phase into a corrective phase. Now, corrective phase could be a consolidation or range, or it could be an actual correction where price action pulls back, right? Just the way price action has been moving, I am anticipating somewhat of a pullback. But with that being said, if I wake up tomorrow and we just broke above these areas and we just continuing, I did mention we could very well see 208 from a monthly cycle perspective. So I'm not putting it out of the way, but I am anticipating potential weakness going down into time frames. I don't necessarily look at the hourly too much, but you can see that price action has been making higher highs and higher lows. From an hourly perspective, this was our last higher high. We formed this higher low, new higher high. You can see price action shifted structure, came back in. And now, if we do shift this area from a 1H perspective, there's chances that now we formed a low, a lower high, a lower low. So then we could potentially see somewhat something like this, in my opinion. This is a low. If this is the lower high and we break structure, then there's chances that price action could do something like that from an intraday perspective. So just bearing that in mind going through the week, right? Yeah, that's basically my analysis. And so now, without further ado, let me pull this over here and let me open up my backtesting document for you guys, and then I can get to backtesting. Okay, I'm glad to mention that I am officially in May, and hopefully by the end of this week I could be able to finish May and June. I was planning on finishing the whole document by the 14th, but that just means that I'm gonna have to work so hard this weekend. Uh, we'll see how it goes. We'll see how it goes. If I can put in time throughout the week, including today, this 45 minutes, 30 minutes that I'm about to put in on the backtesting, if I can put in that time and then make a solid push towards the end of the weekend, I think I could finish my first phase of backtesting by like Sunday, Monday, and then go into my second phase of backtesting, which would be lower time frames, meaning the 15 minutes from my strategy's perspective. And yeah. So let me take that off. And then, so as you guys know from previous sessions, from previous sessions, we always start with Forex Factory because we always need to know what the news is on that particular day, because you guys know that I don't trade when there is any news in that particular day or session. Not necessarily day, but if there's news in that session, red folder news, high impact news, then we don't trade in those sessions. And yeah, just looking at my my Excel sheet. So week 1 for May, I would have taken 5 trades, and of the 5 trades, I would have won 1, 2, 3. I would have won 3 and lost 1, 2, which is not bad. It's around about a 60% win rate or something like that. For week 1, week 2 would have been really good. I would have taken 5 trades in total, and I would have won 1, 2, 3, 4, and 5. Oh, that would have been a wonderful week, bro. That would have been amazing. Or it would have been break evens or something, but like just generally being able to see that your bias building is working makes sense. So yeah, without further ado, let's put in. So we are on May. So we did all the way up to the 12th of May. Let's go. So Monday the 15th of May. The 15th of May is the any news. So you can see this news at 2:30. So we'll mark that as a yes. Then on the 16th, we can see that we have pound news and we have USD news. So we're going to mark that. So there's pound news on the 16th and this USD news. And then on the 17th, what do we have? On the 17th, we have pound news, but that's in the 11 to 3 o'clock candle. So we won't be trading that. On Thursday, we have USD news around 2:30. So we mark the USD news. Yep. And then on Friday, what do we have? We have USD at 5. That doesn't affect my trading session, so we don't have any news on the other particular day, another session too. So now let's go. So we're going to May of 2023. May 23, the 15th. On the daily time frame, we're going to look at the previous day. The previous day was the 12th. You can see that we had a bullish candle. So now when we drop to the 4H, we're going to be looking at the previous 4H candle. The candle before London, what was it? Bullish. Okay, that's perfect. So we have the daily and the 4H aligning in terms of that. The next candle is bullish. And then what is the next candle in pips? Pips. So we had a 40 pip movement. Let's check 4H correlation across the pairs. Okay, so pound USD is bullish too. EJ is bullish. Come on, CJ. Bullish, perfect. What is UJ? Bullish. Okay, so we have 4H correlation too. So not only do we have the daily and the 4H aligning, we also have 4H correlation, which is perfect. What that means is that the pound is strong and the yen is pretty weak, which is perfect. Perfect. If you guys have any comments, you can drop it in the comment box. Or any questions, you can ask me questions and I'll just check it every now and then. But yeah, so Monday would have been a good trading session. On that day, we would have probably taken buys based on how bias building. The next session we won't be trading because there is news, and yeah, so and then we won't be trading the whole of Tuesday. As you guys can see, if we go to Tuesday once again, you can see that we have pound news at 8 o'clock, which means we won't be trading the 7 to 11 o'clock candle. And then we have USD news at 2:30, which basically means we won't be trading the 3 to 11 o'clock candle as well. So now we're just going straight on to Wednesday. Let's go back to the daily time frame. Go to Wednesday. This is Wednesday, so the previous day was bearish, which was Tuesday. So when we go to the, what you can see is that we don't have daily and 4H aligning. Okay. Bearish, bullish, bullish. We might have 4H correlation across 10 pairs. Bullish. What does AJ do? That's a close one. So the open is 90.841 and then the close is 90.846, which means it's bullish. So that is bullish. So we have 4H correlation. Bullish candle. The next candle is bearish actually. It closes bearish, but then what is this push to the upside? 18 pips, so we round that down for 15 pips, and that would be a buy, which would probably result in a loss. I'm sorry guys, my eyes are just capitulating, bro. Well, so Don, I think there's different ways of backtesting, bro. Like there's obviously there's a way in which you obviously do the party play. But the way that I've taken is that I'm going more into data collecting, and let me share my Excel sheet with you. So let me just pull up my Excel sheet and I'll explain exactly what I'm talking about. So stop share. Sorry, my eye, bro. Sheep is. So just give me a minute. share screen. Window. Let's pull this over. Here we go. Okay. So this is my Excel, right? So there's multiple ways to back this. The there's the way of obviously bar replay, which most people use. That personally, to me, the data never really so far. Wait, are you saying the data never really lie based on what I have so far? Or what are you saying? I don't really understand what you're saying. So you're saying the data never really lie on what I know so far. Yeah, data never lies. Like I think that if you have your data, if you have like everything that you need in order to basically like back you and give you the confidence in order to take a trade, you take the trade. Now, personally for me, I have three ways, or not three ways, but I have a three-part trading plan, right? I have my bias building, then I have my evidence, and then I have my confirmation. Now, for the evidence, in terms of the data never lies. Oh, nah, don't worry, bro. But like in terms of the evidence and like the confirmation, that's when I'll get into like actual backtesting and bar replay. But for this, it's just a matter of like understanding when it comes to my bias and how I set my bias for a session, because I'm an intraday trader or inter-session trader. You just need to know on average that if this happens, how often would it actually play out, if I'm making sense? Do you know what I mean? So if you're bullish on a particular day or for a particular session, like how often would you be able to anticipate that that's actually going to happen? And the more you know based on your bias setting, let's say for instance you trade ICT or you trade some type of smart money concepts, right? And you want to understand where price action is going to move for that particular session or for that particular day. If you can determine that based on price action maybe grabbing liquidity at the daily high or daily low at a particular time, and you can determine where the displacement of price actions going, it's going to become easier for you to get into actual trades, right? And so in order to do that, you need data base to back basically what you're saying. You can't just take what somebody's saying if you're going to sweep the high or low of the day, then this is what's going to happen. Like we're going to mitigate orders after that, and then we're going to push to the upside, or like after that we're going to reverse. You know what I mean? You can't just trust what somebody's saying. You need to be able to back that with figures, so then you don't have to go back this. And I don't think bar replay for that particularly really helps. You know what I mean? I think bar replay helps when you actually testing your entries. That's when it helps. And when you do that and you get into that position to start testing your entries, then it's perfect. And also just a note, like backtesting doesn't necessarily work for everybody. I think that you should backtest. I think you should be able to put in the back end work, but I think that you shouldn't necessarily discount forward testing because you're backtesting, if that makes sense. Because forward testing is actually where you can see what your actual reaction is to the markets. Like you can practice everything in backtesting, but you can also like lie to yourself in a way, like, oh, I would have taken this or I would have taken that. That doesn't work in the live markets. If you miss your entry, you miss your entry, and then you're gonna enter late, and then what's gonna happen is you at the end of the day you're either gonna have a bigger stop loss, tied to TP, or whatever the case. You end up losing, and now you risk more because you had a bigger stop loss, or whatever the case is. At the end of the day, if you risk a set amount of like a set percentage, you won't lose more, but your stop is going to be bigger, which means in theory, in order to get your TP, it's going to be bigger, etc., etc., etc. But getting back to the backtesting, I think every person should go through data collecting, and I think in order to do the actual backtesting bit of your strategy, you should be able to, number one, determine bias. Number two, have confirmations or evidence that supports that bias. And then number three, have your confirmations, which is your entries and things like that. Now, a lot of people will tell you go do exercises, do this in order to like understand and like have the confidence in this thing happening over and over. Personally, to me, I actually need something like this that's on the screen for me to refer back to, right? I have a problem with not being able to trade every day. So for me, in order to like know that I don't have to trade every day, I need to be able to look back over this thing. If I go to April, for instance, right? If I go to April 2023, I can come to this specific Excel sheet and I can look over it and I can say, okay, like yes, I've had a slow week this week in terms of like actually trading because I didn't have directional bias on that particular day. But like look at like the busy weeks that you get. Like look at this week, which is the fourth week of the month. So if I had a quiet month, I can come to this Excel sheet and I can go through every month and I can reassure myself that next week's going to be fine. And that's the reassurance that I need. And on top of that, it's just being able to say that once you've backtested and you've like determined what your data is from a like statistics point, if let's say for instance, so with me, I have as a session bias, if the daily and the 4H agrees on GJ, then that's one particular session bias. Then I know that this could happen, right? The next candle could move in the direction of the previous 4H candle. But what is that stats on? Like I know I've seen it multiple times, but what is the particular stat? Do you know what I mean? Like, is it 50%? Is it 60%? Is it 70%? How often does it happen? Right? Like, if you can have that data, you'd be able to kind of assess your risk, number one. So then I have three particular bias setting for a session, right? I know that based on like the previous trades that I've taken, that this is the highest. When I trade London session, which is a 7 to 11 o'clock, at the current moment, I have a 87.5% chance of being able to determine what the next 4H candle is, right? And that's just based off from this current year. Like that's based off from 2024. But I don't have any other data, like physical data that I can go to and reflect off from to say this is a set stat, right? Now, based on like 2024 and the data that I have for this particular thing, I know I can risk 1.5 to 2% for a trade that's in London session. But that's only because I actually have data. You know what I mean? So like that's the important thing. So there is different ways of backtesting. There's body play is it's probably the most common one, but I don't think it's the most effective one for everybody. And I don't think every step in your trading plan requires body play, because there's things that you just need to know. Let's say, for instance, you trade in 10 lines, right? And you need to know that if you set in your trend line on the daily, when it breaks out in the 4H, or like what the strength is of a trend line on the daily, you don't need to go body play that thing, bro. You literally don't. Because if you're going to body play that thing, you're going to be sitting there for hours on end. All you need to be able to do is say, like, I'm not trying to have my strategy, like, I'm not trying to push my goals on the strategy, right? I'm not trying to make it work. All I'm trying to do is be as objective as possible and reflect the numbers that the market is giving me based on my strategy. So if you say, I'm drawing this trend line or I'm placing this fib on the daily time frame, and I just want to see what happens when it hits 61.8, right? If you do that, you can literally just go to the chart and say, let me place my fib from point A to point B, and then I want to see that. Then you can record that data, right? Now, that doesn't mean like that could be your directional bias state, or that could be like how you determine direction for the week, for the month, or whatever the case may be. But that doesn't mean you're taking away the body blade tool, or you're taking away actual backtesting where you backtesting. You know what I mean? Like where you backtesting your entries, because that's where body play comes in. But you can only do that once you have the data of like, how do you find direction? And I feel like most traders to be honest with you guys, most traders have problems with setting direction. Like, that's the reason why you'll find that like one ICT trader will be buying and another ICT trader will be selling. How? You trade the same fucking strategy, mate. Like, how are you guys like trading in the opposite direction? You both could be trading EU, but like you okay, there's time frame correlation and there's time frame based differences, but like how on earth are you guys trading? Like, bro, it just doesn't make sense. So like that's why, but yeah, sorry for the rant, but Don, that's what I think about backtesting. There's different ways to go about it, right? There's this way of the articulating, which I think, to me being a numbers person, the end of the day, I am an accountant. So like me being a numbers person and the numbers being able to reflect from a Excel sheet like this that I use every day, being able to reflect and give it back to me over 52 weeks, what has, let's say, for instance, 4H correlation done on a Tuesday. On a Tuesday, let's say it's 40%. There's a 40% chance that if I get 4H correlation, that the next candle is going to go in my direction. All that means is now, like, I need to either take a 0.5% trade, or I can scrap it completely on a Tuesday. I don't have to trade. And that's when, like, the data-like aspect of it is important. Like, being able to have that data in your hand and make a decision, that's, yeah. Sorry for the rant, bro, but yeah, I hope it helped. I really hope it helped. And shout out for the question. If you do have any other questions on, then hey, bro, shoot. Like, I'm open to answering. Otherwise, I'm just gonna continue backtesting and yeah, see if we can get through May. So right now, I don't think I shared this earlier, but right now, what you guys can see is that, like, from a week 1 perspective, it was looking clean. So all I'm doing is I'm determining what the next 4H candle you could potentially do, right? And what you can see is that of the 5 trades that I've taken, 3 of them played out. So that's a 60% chance of it playing out. And then in week 2 of April, I took 5 trades, and here was no trade, right? So it's 1, 2, 3, 4, 5. I would have taken 5 trades and all of them would have played out. So you can see from a daily and 4H, we had a bullish potential session, and then the next candle played out bullish for 25 pips. Daily and 4H correlation, bullish 50 pips. That could have been an easy buy. And then here you can see 4H correlation. Both of them are bearish, potential sell. So we would have had a potential 100% win rate here. So yeah, nah, bro, you could. I'm here to watch and learn. Shout out, bro. Shout out. So now, yeah. So I'm gonna take my Excel sheet off from the screen and then go on backtesting. Yeah. So I don't trade when there's any news in a particular session. So it's pretty simple. You just basically just, as I mentioned, collecting data. But shout out for your questions, bro. I like the interaction. And yeah. Shout out, bro. Shout out on Top G. Let me get my charts on the screen. Screen. Okay, there we go. What day were we on and what session were we on? Okay, so we're on Thursday. So let's check. Thursday. So this is Thursday the 18th, right? So when I say like the daily and the 4H aligning, I'm looking at the previous daily candle being bullish, and then I'm looking at the previous 4H candle from a session perspective. So from 11 to 3, that's the candle that I'm looking at to potentially trade London session. So if the 3 o'clock close candle is bullish, then I know I have the daily and the 4H aligning, and there's a high chance that the next 4H candle could potentially push bullish. So let's see. Okay, so we have a bullish 4H candle. So that's the daily and the 4H on Thursday the 18th. Bullish. And this is what I was talking about, like with regards to like being objective, right? So the next candle closes bearish, and I can easily say, okay, I want to ignore that, but that's not the purposes of trading. All the like every decision that you make in the live market should be based on data, and I think it's better being honest with yourself with regards to like what your numbers are, and like when you're honest and objective with what's actually happening. Like now when I record this thing, I'm gonna record this as a loss, right? Yeah, so 10 pips probably meant that I wouldn't have traded it because it wouldn't have been a breakout because I'm a breakout trader. But like, so this would in this case it would have been a no trade. But like if this thing pushed more than 15 pips, I would have recorded it as a loss because that's what it would have potentially been in the live markets. And that's all you want to do. You just want to be as objective as possible so that you can set yourself up in the live markets to know exactly which days, because it might not mean that your strategy all in all is like an L. It might just mean that like you only need to trade on a particular day or in particular sessions. Like, and the good thing of like having options with regards to sessions is that like I could trade Monday in London session, and then I could trade Thursday in New York session, and Wednesday in New York session, and then Tuesday in London again. But it's all about like just being able to be flexible to, number one, what your stats are showing. So if your stats are better in London, then trade London. If your stats are better in New York, trade New York. It's better in Asia, trade Asia. I just tend to think that like you when you're backtesting, obviously backtest the time that you can potentially trade, and then find a strategy that works for you and your personality. And that's most important. Like, and then go ahead, collect your data, do everything you need to do, and then we're good, bro. Then you move, bro. Like I feel like that's when you start becoming profitable. So yeah, so then the next candle was bearish. However, it only moved up 11 pips in my direction. So rounding that down, that's 10 pips. So then there's no potential trade on that particular day. Yeah, and then the next session had news in it. We just confirm Thursday. The next session had news in it, unemployment claim. So we won't be trading the afternoon session for the Thursday. So now we can go and look into what we would have done for Friday. Okay, so Friday, here we go. So Thursday was bullish, so we're going to be looking for potential for HP in bullish on Friday. Let's check it out. Is there a bullish candle? So this is bearish. So now we know we don't have daily and 4H, right? So then the next option is to check 4H correlation. Let's check 4H correlation. Bearish. What do we have? Bearish. Bullish. Okay, I still need 2 more bearish candles. Bullish. Okay, so there's no trading session in London for me. On Friday, there's no trading session in London for me. So we know the previous daily was bullish. So now we're still looking for that 7 o'clock candle. So we have a bearish candle again. Okay, let's see if we have bearish candles across the board. That's bullish. If we get another bullish candle, that means they wouldn't have Friday. Okay, Friday was no trading day. It's perfectly fine. There's no trades. It happens. Doesn't happen too often, which is the good thing about my session or my session bias building type thing. But yeah, it happens. So we backtested the full week for May. What is this? May from the 15th through to the 19th. Let me show you guys. So if I stop sharing that particular thing, and let me show you. So we backtested the full week, and this is the results, right? So on this particular day, we had the daily and the 4H. You can see that the next 4H candle came out bullish with a potential push to the upside after the breakout of 40 pips. We would have anticipated potential buys. So one potential trade on that particular day, one potential directional bias playing out. So you say that divided by that for 100% win rate. No trades on the Tuesday since we have news in both sessions. So there's no trades on that particular day. On this particular day, we had 4H correlation. So there would have been one potential trading session. And then you can see that the next candle was bearish. And that basically means that we would have, well, I don't usually do I do 0. And then you're doing that. So you say equal to that divided by that. So you can see that we had one potential trading session. The next candle was bearish, which means we didn't it basically didn't play out. It would have been lost, right? 15 pips, so there could have potentially been a trade. We would have anticipated buys, but we would have lost. Here was no trade just because it only pushed up 10 pips, and I need more than 10 pips in order to enter a breakout, and then no trades on Friday. So this would have been a quiet week with only 2 trades in the week. This was such a quiet week, right? But this reminds me that I can have quiet weeks, and this is more than just like stats to me. This tells me like how much trades I can take in a month, tells me how much, like, what are my quieter weeks. When you know this data over a long time, like, what's my quiet weeks? What's the losing streak that I can go on? What's the winning streak that I can go on? Like, and you can get that all based on this, right? This doesn't necessarily say whether you get a trade or not, but it will tell you whether you can trade or not on that particular session, right? Based on my strategy, obviously. But what I wanted to say is the previous week had 5 trades, which is a busy week for me, because my busy weeks average between 4 to 6 trades. So this is on the higher end of like trading. And then the previous 5. So you can see that the month started off busy in May, but then like you do get these quieter weeks, especially the weeks where there's like a lot of news, right? The weeks where there's a lot of news are the weeks personally for me when it's quiet, because I'm not trading around news times, just because like generally what I've seen over a long period of time is that when there's news within the 4H candle, I'm more likely to lose. And so I just take it out. Whenever I'm more likely to lose, I scrap those things. Scrap it. But yeah, that's my session. Don, if you have any other questions before I dip, that's gonna be my backtesting session for today. And thank you for your questions, bro. Like, yeah, thank you for your questions. You can see, yeah, you can see based on my turnover rate of trades, this would have been a decent month so far. 3 weeks in, still need to do the last week. I'm on 12 trades. 12 trades, potential win of 8, potential lose of 4, which is roughly 60% strike rate. So yeah, quite a clean month so far. I am trying to finish this off by the 14th to the 18th, so around about next week, trying to finish this whole document off and have the whole 2023 done and dusted, so that I can move on to testing the second phase of my strategy, which would be the 15-minute time frame, which gets into like the nitty-gritty of the strategy. And like once we're done with bias building and you can confirm the number of potential days you can trade in a week or in a month on average, then I can then go ahead and look into the bias building. I'll rewatch the video. So I'll rewatch the video because I want to be somewhat of a successful trader soon. Yeah, bro. Shout out. I think it's just about work, like work and discipline. That's what I can say. I think if you can be disciplined in live markets, handle risk management, and have strict trade management rules in terms of your number of trades you take, and then it's about fine tuning, bro. Then it's about fine tuning. But shout out, Don. Shout out for tuning in. And I know, like, if you want it bad enough, you'll get it, bro. If you want it bad enough, like, join the train. And yeah, shout out for tuning in. And I'll be back on next week, Tuesday, backtesting again. I'll post my week's results on Sunday. So yeah, shout out, bro. Have a good week further. I hope you have a profitable week further. And good luck with your backtesting, good luck with your data collecting, and good luck with building the confidence in the market, guys. Like all backtesting is data collecting and confidence building. So if backtesting is not giving you the confidence to actually trade, then switch it up and forward test for a bit, and then you come back to backtesting afterwards. So yeah, but all it is confidence building, giving you that confidence to actually like believe in your strategy. And once you have that belief in your strategy, it's easier to execute, knowing what your chances are to win, knowing what your chances are to lose, making informed decisions based on what is actually happening. But yeah, guys, from your boy Marcy at the Modern Day Trader, have a profitable week further. And shout out to everybody that tuned in and everybody that's watching this after the fact. Good luck with your trading, and I hope you had a wonderful week and a wonderful month. From your boy, peace out, man.